So thank you everyone for joining us today. We're here to discuss enterprise solutions for digital wallets and digital assets with Vipin Bharathan, founder of DLT.nyc, and David Hochhauser, CRO of Tel Aviv-based cybersecurity firm Hub Security. We'll start our webinar with a brief introduction to our speakers, and then I'll hand over the stage to David and Vipin for their presentations. At the end, we'll hold a short Q&A to wrap everything up. So if you have any questions throughout the discussion, feel free to drop them in the Q&A section below. If you can't find it, you can also put it in the chat box. That's fine, we'll still see it there. I'm joined now by Vipin Bharathan. Vipin is the founder of DLT.nyc, an enterprise blockchain consulting firm and capital markets special interest group in Hyperledger. He has been involved in the Hyperledger community right from its inception, working as a developer in industries as diverse as medical malpractice, insurance, and media. He became interested in blockchain technology early on and was one of the first blockchain strategists for North America BNP. Vipin was also involved in the founding discussions of R3, TAH, and the EEA, all significant blockchain consortia now, and also recently helped launch a CBDC project in Hyperledger Labs called Ethaler. Welcome, Vipin.
It's a pleasure to be here. Thank you for having me.
And thank you, Vipin. It's wonderful to have you, and thank you for joining us here today. We're also joined here by David Hochhauser, the CRO of Hub Security. David is an experienced executive in the global security industry with a broad background in security, enterprise software, and cloud-based services. David leverages his experience in cybersecurity from hundreds of customers he's worked with and he's met along the way, and is currently focused on safely transacting businesses onto the blockchain. He is the CRO of Hub Security, a cyber tech security startup working on an innovative key management platform designed to protect cryptocurrencies and other digital assets. Please help me welcome David.
Thank you, Sterni. It's a pleasure to be here as well, and want to thank Vipin for joining us today.
Great, thank you both for joining us today. I'd like to first hand over the stage to Vipin, who will share with us his thoughts and insights on enterprise solutions for digital wallets. And then we'll hear a bit from you, David, who will share your expertise on the cybersecurity challenges that are most commonly faced by enterprises when attempting to secure their digital assets. Take it away, Vipin.
Thank you. Let me start by sharing my screen. So I'm going to talk about digital wallets, which is, of course, a vast topic, and I do not want to dwell upon the technical aspects too much, just giving you a survey and also my thoughts on certain aspects of digital wallets. The main theme that I see here is convergence. When I say convergence, I'm talking about two things. One is the convergence in what the digital wallets manage, and also the convergence in some of the technologies that underpin digital wallets and the user experience, which is the paramount thing that I focus on. So let me see. A simple definition would be users manage their assets through digital wallets. Note that I do not say digital assets, I'm talking about assets in general. Then, what are digital assets? According to the SEC and FINRA paper, the digital assets are assets issued and transferred using DLT. These may or may not be digital asset securities. When I say digital asset securities, the security has to fit the Howey test for security, which is a very strict test, but it can be a wide variety of assets. Now, I always believe that many of our concepts span a spectrum. For example, the digital wallet spectrum spans very specialized assets like cryptocurrency, digital identity, digital asset, I mean, cryptocurrency can be thought of as a digital asset as well. And general purpose wallets like Apple Wallet, which everybody is used to. So you're already using digital wallets. Most people are. When I say, what is a digital wallet? Depending on who you ask, you'll get different answers. Again, from the World Economic Forum definition, it is a non-physical storage device for cryptocurrency that a person downloads as a software file and remains connected to the internet. Now, I have put some of these phrases or words in bold because I believe they are not, they are either wrong or not actually defining digital wallets. For example, the whole word non-physical, we'll get into later. For cryptocurrency, so it's not just for cryptocurrency, it's for any asset that can be reached digitally. That includes even your bank balance. And a person, it can be an enterprise or a person. And the other aspect there is it remains connected to the internet. That, we know that under certain circumstances, the wallet can be disconnected from the internet. And in fact, it's required to be disconnected from the internet. Wallet can be downloaded and presented in many forms, including the ones that they're mentioned here, and maybe other physical devices, not just non-physical devices. So I attempted a take two on this. A device used to manage digital assets, device in the sense of a hardware or software device or a combination thereof. And it has to have three aspects at least: key management, controls for access and recovery, and path to location of digital assets. Path, when I say path, that is a way for us to control the asset using the keys that are in the wallet or accessible through the wallet. Usually they are secured by asymmetric cryptography. I do not want to go into the details of it. It basically means a public key and a private key, with the public aspect known to everyone and the signing only using private key, which can be checked with a public key. So the key management is basically the management of both private and public keys, but mostly the private key in terms of what, who it is visible to, and how can you secure it, how can you control access to it, and so on. Normal people cannot remember such a long key, so that's why it is kept inside either software or hardware or even a piece of paper. Now we come to the enterprise wallet. My thesis is that even in an enterprise, there is a convergence between what the enterprise users do and what ordinary users do. So enterprise users are users too, but obviously the enterprise wallet has to have much more, many more controls according to regulations. The key management has to obey regulations. There have to be enterprise controls for who's allowed to access the wallet, especially the role-based access control should be used. And of course, the ramp to the location of digital assets. Sometimes the key itself is kept in a sharded state. That means like no one person has access to the key in naked key. And so there would be something like a multi-party computation that controls the, that is used for signing, and key is constituted from multiple people's signatures, and creates a way to get, release the asset. And of course, you could have a complicated situation, not complicated, but a multi-tier situation in which the MPC or the multi-party computation is with multiple roles, people in multiple roles, unlocking the access to a piece of hardware, an HSM hardware security module, where the key is held, and the signature happens inside the hardware security module, but only after proper MPC procedure or the ceremony has succeeded. Custody of digital wallets, digital assets can be a complicated issue. In the marketplace, any broker-dealer can function without the custody of the digital asset at any point, meaning they just send instructions to both the issuers and the counterparties, and the counterparty or the issuer. I'm talking of the primary market, but you can extend this into the secondary market, where there would be people trading that asset that has been issued. We are not distinguishing between bonds and and equities at this point, nor are we distinguishing it from cryptocurrencies. So in this case, it is a self-custody, and this is the most common case today in cryptocurrencies. But I think this is a problem, because in order for the market to go beyond just cryptocurrencies into generic digital assets, we need to look at the second type of custody, which is where the broker-dealer either functioning as a custodian at some point, and then of course the customer protection rule operates, which is the same as for a non-digital asset, which is why I say that there is convergence between digital assets and regular assets. And the security or the digital asset is held in the enterprise wallet of the custodian at that point. There are specialist custodians like in DTC, or it's maybe separate from the broker-dealer. The broker-dealer, especially if they're a huge bank, they can do custody because they are set up to do it. But with the advent of more frictionless enterprise wallets, it may so happen that the custody can go into smaller broker dealers. But right now, specialized banks, specialized enterprises deal with broker dealer type custody. I mean, these are only some of the examples. So when we say customer protection rule, the SEC and FINRA have come up with, for the United States, have come up with these rules, which is basically that it needs adequate insurance coverage. That means anybody who's a custodian, other than a self-custody, needs adequate insurance coverage, and the full control of the keys, full control of the movement of the digital asset, which is through the keys. So you cannot have a control of parts of the keys be with the service provider the custodian needs to have full control of the keys, and the private keys must be uncopyable, which is a very difficult thing to prove. And these private keys can be kept in HSMs where you can prove that the key never leaves the device. It's either a physical device or it is a virtual device that is a cloud device that is that obeys certain PKCS 11, I think, which is certain standards which are recognized by the SEC and FINRA. And the keys cannot be otherwise encumbered. That means you cannot sell, hypothecate, lend, or otherwise encumber the asset. So the asset has to be in a segregated account, not commingled with the custodian funds. Obviously, this needs to be done to prevent the customer funds being lost due to bankruptcy or any kind of problems with the custodian. And it should also be possible to reverse or cancel the transactions. The FATF rules for AML KYC have to be followed. FATF is a global recommendation association that recommends AML KYC, and they are very influential, and everybody follows their rules for AML KYC. There's a whole other bunch of regulations concerning digital asset custody, which are not directly related to the wallets. So, but they all have to be followed. So you have to be set up to do all of that before you can say that you are custodying digital assets according to the rules from FINRA and from SEC. And they have provided a write-up about this custody rule, which is obviously preventing widespread use of widespread issuance and trading of digital assets which are not in the private realm. So as I had said before, this is the spectrum, and here I've added on one end securities, bank accounts, and cash as assets controlled by a wallet, which people may not recognize is being done through a wallet. Now, we spoke about the controls around digital wallets. One of the things that we spoke about in the control part is how does the wallet recognize the person who's entering? How does access control happen? It has to be through proper authentication, usually multi-factor, sometimes for high-value assets includes biometrics and other aspects, so that the authentication is per NIST guidelines. Another aspect of wallets is that they can function as pivot points or glues interacting with multiple chains, which implies that the wallets themselves can create a pathway towards interoperability. This is often not even thought of because the wallets can either store or access private keys on multiple chains on behalf of the same user and try to sign items on one chain and animate the asset movement across chains. The main thing about any user interface design, not just wallets, anything, is that the users do not want to be bothered about thinking about all these private keys or PKI. The choice architecture is very important. Technologists normally don't think about choice architecture, but choice architecture is what spurs adoption. When you have a simple system that is intuitive to use, even if it is not, even inside the enterprise, you want the choice architecture to be proper so that it's easy and intuitive. I can't stress this enough. And so I have prepared a bunch of Q&As, but obviously it can be thrown open to the public for whatever they want to ask me.
Great. Thank you so much, Vipin. It was a really fascinating presentation. And I wanted to thank you for sharing it with us. And we will get to the Q&A at the end. But I'd like to hand over the stage maybe to David and maybe have him expand on the security challenges and security solutions that come with owning and managing a digital wallet. David, would you like to share your screen?
Sure. Can you see it now?
Yes. Great.
Okay, perfect.
Okay. Take it away.
Perfect. Hey, thank you. And Vipin, thanks. As usual, I always learned something new when I'm listening to you. So appreciate that. And we'll have time at the end for questions for Vipin at the end of presentation. Now, I just want to spend a few minutes on kind of some best practices based on, we've had a lot of experience as a company and as a person with this area. So I thought I'd share some of those points as well right now. And let's kind of start with a question, what these things have in common. Now, keep in mind, this is relative to enterprise wallets. So the answer in this case is, is not like both result in isolation or something. This is relative to enterprise wallets. And although in one respect, it is actually related to isolation, and it has to do with one of the best practices we've seen deals with remote management. And the reason why I kind of put COVID up there is recently we've come across a lot of people who are obviously kind of isolated at home or have been, being able to have to deal with it remotely. And typically in enterprise wallets, especially those that are dealing with kind of custodian accounts, if they're dealing with high value transfers, it often requires, in order to extract the money, you put the keys, you protect them a lot. And a lot of people protect the keys. They physically either split them up or either on paper or sealed in different modules and put them in vaults. And in order to do it, it requires to put them together, and to actually sign on something and they're offline requires physical presence. And that recently has become quite an issue when you start dealing with people who are actually remotely and now actually have a problem. And there have been a lot of places that have actually had some difficulty on getting to some of the assets on a frequent basis, and really just do it once a day or for an hour or something. So to keep that in mind, people are often remote, and there are aspects of dealing with not just remote managing of the keys and stuff, but also managing of actually kind of the funds transfers or anything that you want to access. Does require some degree, we find, is extremely helpful to be able to do this remotely. Next question, kind of what are the lessons here? Now, what you see, in the slide is kind of a creepy guy peeping in on people. A voice simulation, just to give you an idea, there are obviously all different ways of hacking. This is a case in Germany in a bank where somebody actually used AI to simulate the voice of a CEO who went in and approved the transfer of almost $250,000 of funding to someone else. So people are being extremely creative on how to access funds. And the last one is kind of being cute. There's Roadrunner. Obviously, it looks like he's running away and stealing the keys. So how do we deal with, one of the things to deal with each of these? One, if you take the hijack, what's really happening here is, if you look at information, somebody wants to transfer a certain amount of fund, $50 million, even or $1,000 from one account to the next. They might be looking at the screen on their phone. They might be looking at the screen on their laptop. And people are able to break in and change. You could never really trust that's there, as that was actually going to be signed and sent over. And people are breaking into actually the transaction information is one aspect, is how to literally hijack the information that's showing on the screen and changing what it is. So one critical thing is literally you need to ensure what you see is actually what you're signing on there when you do this. And there are ways of obviously of going about doing that. Another area to consider is when you're dealing with stealing identities of people, whether it's voice, or the more common thing is phishing attacks. And we've seen many cases of people taking an email and sending in approval to whether it's transfer money or to do something. So another aspect is make sure when you're building this, whether it's an enterprise wallet or custodian, you really need to look at you have a secure means of authenticating precisely who that person is, and a very secure means of transferring that request over to actually get signed and transfer that funds out as well, which is another critical thing to take a look at. And the third one, one example where, Roadrunner here was stealing keys. A couple of pieces of advice there. There's two things. One is the keys. One, you need to protect them, and they should never really be in software. Anything that's actually just in software, in our opinion, is actually hackable. But the other thing is also its usage. A lot of times, for certain things, it's fine. You take the keys out, you encrypt them, and you sign something. But if you're dealing with high-value transactions, it's not just the keys, but the usage of it. It should never, ever leave that secure environment, which means you actually have to use them within the secure environment as well. And to keep that in mind, if you really want to protect what you're signing, protect the keys that are doing the signing, and protect the actual software and the application very carefully that's actually using it at the same time. Okay. Question 3, what do these have in common? And keep in mind, again, what they have in common with a wallet. So you see a picture of aliens. If you don't know, the next picture is Springsteen. We have a whole nother issue. And the last one is you see a woman in a wedding dress who kind of looks like she's running away from the wedding. So I'll give you a second if you want to think what some of these might have in common. And believe it or not, they all are actually insurable. Whether you should insure them is a different story. So one thing that we've seen that makes sense, whether even if it's for your own sake as a self-custody, or potentially certainly if you're a custodian, it should be for theft of the actual. Some people have cybersecurity for break-in and stuff, but it should literally be theft of the currency or the securities that you're actually holding in the wallet. And you've got to look at the amount. Sometimes the places that you're putting your money in has insurance, but at the same time, it may be covering insurance, one policy, $100 million for everybody. If you do it yourself, you can get extremely high insurance covering just your own amount of cryptocurrency that is there. So that's another thing to just carefully consider at the same time. For those who are curious, yes, there is actually insurance on these things. Springsteen insured his voice for $6 million, although for Springsteen at this stage of the game, that's probably pennies for him. The aliens, there are actually people who've insured themselves against alien abduction. Take it for what it may. And the third one, if you're about to get married, you can actually take insurance out. You're spending a lot of money on the wedding in case your partner takes off. I'll leave my comments on that one to myself. if that's something you're actually worried about insuring. Okay, so that's another area just to strongly consider. I'm keeping this brief. I have a whole range more of these things to consider, but just for brevity, and we could cover more in the questions. Do want to thank you for the few minutes. Again, thank Vipin. We'll take any questions. And on my last thank you, the final thing, by the way, to continue is about being quantum ready. That is something, obviously, today you're not going to break in, but as you start going out and having, especially enterprise wallets, it is something to think about. Wait, what do I do once quantum is there and can actually enable break-in? And that's something to consider strongly as well in a wallet that you may have. With that, I thought I'd keep that a few fairly brief suggestions, and I'll hand it back to Sterny.
Great,
If
thank
you've got any
you.
questions,
Thank you, David.
fine. And Vipin, you may want to open your mic in case the questions could go either way.
Thank you, David. That was actually really interesting and super engaging. And I think the examples that you gave help us put the applications, security applications into real life scenarios. So thank you. So these were all very fascinating topics, and I'm so glad that we got time to cover them all today. While all of them really do require deeper discussion, we're very grateful that you both had the time to flesh them out as much as possible. So as David mentioned, now I'd like to take the opportunity to open the floor to our attendees. Anyone who might have a question, feel free to drop it in the Q&A section below or in the chat. That works too. And we already have a few that have come in, so I'm just going to shoot them off. And the first one is for David. When would you use a consumer wallet versus an enterprise custodian wallet?
Yeah, interesting question, right? Because there are various wallets, and I'll answer that and also be happy to see if Vipin has his choice. Any thoughts on that? I've been thinking about that, and there's a lot of people, I don't know if there's a hard and fast rule, but there's a lot of times you have consumer wallets, you might buy $1,000, dollars worth of cryptocurrency and stuff. And when do you store it? You have your own wallet, and then they're assuming when do you kind of use an enterprise or in this case, probably a custodian. The best I could tell, and it's still early on, I kind of put an analogy to what you would do with cash at this point. You kind of have a private wallet. You might put $100, $1,000 in it, whatever you decide. You might store some money, at home. So it's a matter of degree of risk, I think, that you're willing to take. The custodians and their enterprise wallets should obviously be far more secure. So if I was going to spend and buy $50,000 worth of currency, I might want the protection of having that inside of a custodian and insured, the same way that if I walked into a bank, I would expect them not to put it into like a wallet in their pocket or in their drawer. I would expect them to put it in a secure vault in the back, and safely store it away. So I kind of make the analogy. That's my rough, thinking on when you might decide to use one or the other. Vipin, I don't know if you have any more thoughts. I don't know if you've even heard of any specific rules around that or anything. I think it's more a matter of preference.
Well, if the question is about enterprise wallets versus custody wallets, is that the question? I mean, that's what
Yeah, it was
I heard.
enterprise. It was almost more when do people, people are buying currencies, and sometimes they might put everything in their own consumer wallet, and sometimes they might say, let me store it safely in with a custodian. It's almost like putting it in the bank, and so they might have a wallet, but it's more a wallet. They've stored everything with the custodian rather than keep it in their own personal wallet.
Well, as we saw, custodians have fiscal duties that they have to perform, and that obviously would protect you much more. And, we have mentioned 3 or 4 of them. One was the insurance aspect. The other was the complete control of the keys and segregation from their own funds. And, they have to follow some KYC AML type rules. Then there was another question about when, other than banks and insurance who would have enterprise wallets. Of course, crypto exchanges definitely have. I mean, I don't know whether you can classify them as banks or insurance companies, but that's another place where this, a lot of innovation is happening around wallets. So that's my answer to these two questions.
Okay, good.
Great, thank you. We have another question here from one of our attendees. I'm not sure who this is for, but one of you can respond to it. Can you give an example of enterprises, not banks or insurance companies, that are using enterprise wallets, and for what kind of use cases?
Which is what I just answered that, I think, short form. But David, if you have more to say on that topic.
Yeah, no, I'm sorry. And if you could just repeat the last part, because it cut out for a second, so I didn't hear the second part of that, what you said.
Sure. So the attendee was asking, can you give an example of enterprises that are using enterprise wallets, and for what kind of use cases?
Oh, so yeah, I mean, one is what Vipin said before, and I guess from a perspective of examples, if they're thinking along the line, if the question is thinking along the line that in some cases they're using enterprise wallets as custodians, meaning they're storing cryptocurrency, they're using it to safeguard digital securities, usually regulated types of securities. Those are the kinds of things they're using it for. And I've seen cases where, so they're doing that for multiple people. I've seen cases even for potentially for merchants, for high dollar merchants. As people start using this more and more for potential purchases, there's one group I know that's starting to even look at merchants who may individually store their own currency if they have larger amounts, and they might want a more secure wallet in that case. So there are a number of different kinds of users out there, increasingly so, who are using it.
Great, thank you. Vipin, do you have anything to add to that?
Well, my definition of a digital wallet is much broader than most people's. So I am surmising that even for the control of regular assets, the digital wallets are being used all over the place. I mean, that's there's a specific case of digital assets on the DLT that are controlled by private keys that have specific challenges, which we mentioned anyway.
Okay, great. So we covered those. Jamil Sheikh from New York is asking, are there solutions in the market that address some of the use cases and requirements that have been mentioned?
David, you probably want to answer that because you're in the company.
From a self-service perspective, there are, and one, just to be fair, from an education perspective, of course, there are multiple solutions out there. There are some where there are people who are services and providing the service, and there are some technology. Obviously, from our perspective, Obscurity provides an enterprise wallet, not necessarily a consumer wallet. There are multiple consumer wallets, and I have at least 5 of them on my phone right now. But from an enterprise perspective, we provide obviously an extremely secure hardware-based solution with a lot of the factors about dealing with things that we didn't have a chance to discuss, even multiple signatures and approvers and stuff that are out there that are used, all over by both people who are doing security token offerings, people who are doing exchanges, people who are storing, buying and selling different currencies or digital securities. So yes, in general, we're obviously a vendor that does that. There are several. There, just to be fair, there are different, and obviously we think ours is the best. I'm not being objective on that.
Right. And in terms of consumer wallets, do you have any that you recommend? Any solutions that you recommend?
The one comment I'll make, I don't know if any that I recommend. I don't know if I'd recommend. I think there's still some work on some of them to be simpler. they still require to me a little bit too much technical knowledge to use them. And I think that's important as we expand beyond the nerds, and I'll include myself in that, who love this stuff and use it. There's one company we're working with who's actually working on making it as simple for them to use that they won't even know the difference, almost between whether it's crypto or digital securities and regular securities, for example. But I think there's work to that would be my only comment, but I don't have any recommendation on one or the other. Vipin, if you have a favorite one for consumer, go ahead. But
okay, we have another question here. Somebody has asked, how do you prove that a private key is uncopyable?
Well, if the private key never leaves the enclave and cannot be accessed from outside other than to get a signature done, then I think the current setup, SCC or FINRA do approve those for uncopyable private keys. That's the short answer, and is physical security combined with a lot of other processes around it that prevent the HSM from walking off the premises, I guess. But it's all, in the end, hacks come in so many different ways, and so everything is important. It is a holistic privacy by design that has to operate, and every piece of the puzzle has to be strengthened in order for the whole solution to be not vulnerable to the weakest link in the chain. But in terms of the uncopyability, that's one of the ways. I don't know, David, whether you have any other ways. Hardware devices like even smart cards, which with built-in cryptographic facilities, encryption and decryption facilities that do not let, even if you break the card, then it'll stop functioning. So it may not, it's a physical device with an uncopyable card.
Right.
Uncopyable private key.
Right. And the same attendee had a follow-up question. I don't know if it doesn't seem like it's a follow-up to this, but it's a second question, which is, do you think that smart contract-based social wallet models such as Argent can be applied to corporate or institutional custody?
Not according to the rules that are currently there.
Okay.
At least that's my read on them, but the person is free to say why it could meet the rules, like Argent. Why would Argent meet those rules?
Okay, great. So we have so many questions. Thank you.
Yes, which
Great.
means that it's a good thing. Means people are at least interested in this topic. It's not like we're just talking about stuff that no one is interested in.
Yeah, and I think also this is a topic that a lot of people have had an interest in learning more about, and especially where the industry is heading. I think that provides a lot of good information, a lot of good questions. So we're really happy that you guys could be here. So I'll move on to the next question, just because we don't have a lot of time. We have 10 minutes until the webinar will completely end. We have a question here. Do you have any thoughts about latency and wallet solutions? Is there always a trade-off between trading speed and storage strength? Are most hacks on hot wallets?
I'm trying to understand it.
Repeat it. Do you have any thoughts about latency and wallet solutions? Is there always a trade-off between trading speed and storage strength? Are most hacks on hot wallets, which just seems like it's a follow-up to the initial question.
Well, trading speed. The point is, you're not going to, huge amounts are normally require more controls, and hence the trading speed would not be a major factor. But if you're paying for coffee, you don't want to wait for 10 minutes or whatever number of 6 blocks on the blockchain. So hence, you have other solutions that take care of those micropayments. So is trading speed and, are they related? The safety of the wallet, depending on how many signers there are and all kinds of other criteria, will introduce latency. I mean, it's not just of course, MPC itself introduces latency, for example, but it's not significant latency for the current, compared to the current situation where the settlement is, for syndicated loans, it's T+20. I mean,
No. And that's, I think, Vipin, as well, because I think there are ways to speed up certain things by taking them offline, like M-event approval and the quorums and stuff. You may not do them on the blockchain, and speeds it up. More of the latency is probably in the blockchain itself than the wallet. I would suspect, and there's a lot of people working on trying to enhance that, that piece of it. So I would think just the nature of the blockchain maybe is more about latency. The other part, hacking? Oh, go ahead.
Some of these questions seem to reveal that these attendees could have given the seminar better than I.
And those make it detailed. I don't have any statistics whether warm wallets were broken in more than cold, other than cold will do a lot more damage than warm.
Great. Okay,
Yeah,
so
only because cold usually holds much more.
Yeah, that just holds more money, so.
Sorry, guys, we're just short on time, so I'm going to move on to the next question. Have either of you any experience in using multi-signature weights and issuance accounts in order to create custodian or bridge accounts?
Multi-signature, what was the following word?
Have either of you been
Weights.
using multi-signature weights? Yes.
We are into the real weeds now.
Yeah. Yeah, I don't know if we want to just say something general and then try to follow up afterwards with questions, because some of these questions are going to take a long.
Yeah, try to keep it around 60 seconds if you can, 120 seconds,
Yeah.
and we'll pass it off.
I mean, I would just say in general, multi-signature, there's a lot of it depends on the policies of the specific place and the amount that you want to sign off on, and depends on which amount you are and who has to actually sign off. It's policy driven a lot of times within a bank. There are other things besides just who and when to take into account. The velocity of how many transactions can occur at a certain time. Delays may need to be required in certain places. So there's a whole range of things to be considered, and I think most of those are usually dependent on a specific policy. Vipin, if you have further thoughts, and if I'm missing some of the gist of the question, feel free.
No, I mean, it's whether we have had any experience with it. I personally haven't had any experience with multi-sig weight with different weights. I've seen some literature on that topic, but not any direct experience. Go ahead, Dave.
Yeah, no, that's fine. And I mean, we've implemented in several places, but that may be one we could follow up also afterwards, because I think it might be a specific situation you might be thinking about.
It's talking about account recovery. Somebody is talking about account recovery for non-custodial wallets. What kind of innovation have you seen?
Yeah, let's get to that. For enterprise non-custodial wallets, what kind of innovation have you seen with account recovery?
I give you Couple things. Well, one, I've certainly seen places where there is an account recovery and that becomes a disaster. Other places usually you're backing up the phrase and the seed, and a lot of times some of that with the consumer ones is a little bit more concerning. With the enterprise ones, there's a whole range of sophisticated things you're doing for account recovery and stuff that is occurring. You have usually a much more sophisticated backup, and actually part of the regulations that I've seen is you actually have to have some pretty specific things in place on how you actually back these up, and they are backed up in duplicate drives, for example, and duplicate HSMs. So there are some pretty strict things you're doing to recover them in the enterprise. I don't know if you've seen anything really innovative, Vipin, on consumer side on how they're doing this.
No, I haven't. I mean, there are all kinds of things coming on, but account recovery is basically loss of control of the private key, right? I mean,
yeah,
in a sense. So one of the ways is obviously to keep a backup, even a cold backup, just writing it down and keeping it in your safe. Because I think one of the things that I'm going to write about is the apparent loss of control of private keys in the public chains that seem to leave a lot of cryptocurrency that is not moved in more than 10, 12 years or whatever a number of years are since it was started. But they could point to counterexamples saying 40 Bitcoin has moved, which hadn't moved for 10 years just recently. So that means that any of that stuff. So if you lose your private key, you're pretty much toast in that situation. Yeah. So key recovery is if you're holding cryptocurrency in the public sphere, but he's talking about enterprise non-custodial wallets.
Right. And enterprise, they'll have much more sophisticated elements in there. And it's usually a combination of process and technology that they're doing. And that is one of the critical things, without getting into the details here, but to design when you're doing it. You have a lot more in control to be able to do that than a consumer.
I'm gonna have to cut you guys off here because we're about to be shut down and shut off. The webinar is going for another 2 minutes, but thank you everyone for joining us today. And thank you to our speakers, David Hochhauser and Vipin Bharathan. We hope that you're all staying safe and healthy at home. And we look forward to hosting many more discussions like these with such an engaged audience and plenty of more crypto topics. To stay updated, if you want to join us for future webinars, you can follow Hub Security on LinkedIn and on Twitter so you don't miss a beat. And you can also check out Hub's weekly digest on Medium for the latest stories coming out of the blockchain and crypto sphere. So thank you guys again. And if you have any final words you'd like to say.
Just thanks again. I appreciate the time.
Thanks to the audience.
Thanks
for those wonderful questions. And thanks to the organizers, Sterny and Gilly and David, of course. Thank you.
My pleasure.
Thanks, Vipin, for participating. Appreciate it.
Stay safe, stay healthy, stay home. Thank you, everybody.